Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, now we'll take a look again in the gold market. In the gold market you can see was some dramatic action on Friday, and in general it just has confirmed our suspicions and concerns that we have in relation to recent upside action. When in the beginning of the week we have come to conclusion that market right now is showing something wrong, something different that and behaves some bit different compared to the behavior that it should to show when it stands in the last part of the reverse head and shoulders pattern. And we see some dramatic retracements, and it's really the action that's not stands in the relation not correspond to normal behavior that we would like to get. We said that something is going on here, and probably we should turn to the bearish position rather than to the bullish. It's better to close all bullish positions when we have seen this dramatic action and the market has formed second bearish grabber here. Recall what we have discussed here. We said probably right now we should better to take the short position with the expectation of the taking out of these lows rather than think about the longs and thinking about the continuation to the upside. And this has happened very soon. So you can see market has shown the dramatic plunge down, taking out of these lows, and by this action the minimal target of these grabbers has been achieved. Market clear out the lows of this shoulder. But after that, the data on the Michigan Sentiment Index has been released, and it has pushed market. It was weaker than expected, and it has reestablished the status quo and returned gold market right back up. It has formed this some kind of the hammer pattern on the daily chart. And the situation is a bit tricky here because by this action we could say that this level has been broken yet, because the part of our analysis stands around the breakout of this level. We said if market will break it down, then the next area will be 1130. But this action it doesn't suggest yet that this area has been broken. Even more, since we have the hammer pattern here, we should treat it correspondingly. So it means that we can't take the long position until market will erase this pattern, will below its low. And in fact, market based on this pattern could even show some short-term continuation on the upside. Maybe it will not become the real upside action and will not be the real continuation of this head and shoulders and not the tendency to the neckline. But if even we will treat this pattern separately, it's just tactical issues based on the this hammer pattern per se, it could lead to further upside action. That's why currently we need just to take a look what we have on the intraday charts, and if we have some other confirmation of this possible upside action, we could try to take the scalp long position based on this pattern. That will be our trading plan for the coming week, because if you will read our weekly research, you will see that mostly the major picture stands on the big charts on the gold market. In the short-term perspective, we probably will have to deal with some tactical issues, some tactical small patterns that we will get within the weeks, and we will try to trade them, prepare the trading plan. But it needs some time for the gold to really clarify the strategical issue. And precisely speaking, we need to see what will happen when investors will start to return back on the markets. What sentiment will be reestablished in the market. So that's the question that demands for some weeks at least. That and right now we probably could just be focused on this short-term setup and trade in particular this setup on the coming week. So here we have the hammer. Here we have the bullish pattern And this is absolutely different pattern. Now we should forget about these grabbers because they are done. They have achieved their minimum target, and that's in fact we have right now is absolutely separate and the unique setup that have no relation with the previous one. If we will take a look at the hourly chart, guys, we have the clear and classical type of the wash and rinse of the previous lows. This type of the wash and rinse, when the market takes the shape of the big engulfing pattern, that just tells us that that was just the stop grabbing, as it calls really, by the patterns that have been formed. So you can see this first dive slightly below these lows and fast return right back up. Means that just was the stop hunting, and when they were grabbed, market return right back up. That's typical shape of the wash and rinse. As we have bullish pattern here, type of the wash and rinse, we could count, at least theoretically, on possible continuation based on this pattern. And we know that the minimum target of the engulfing pattern, the hammer pattern, is the length of the bars. If you will count it to the upside, you will get approximately an area around the weekly pivot resistance one. So that will be our potential target on the common week's 12-10 area. The invalidation point of this pattern stands right here, precisely at the weekly pivot support one, right below these lows. Okay. Just a minute, I will check this. Okay. So right now, just a minute. Right now we could stick with this engulfing pattern and watch for possible retracement down for taking the long position with the target approximately around this area. So our task here is to take the position as close to the lows as possible. So we need to minimize our theoretical risk. So if we will be wrong, we should get the minimal loss. On the hourly chart, we have this situation, and probably here we should keep an eye on this area. It's a bit wrong type of views here. Okay, so I probably will erase it at all because we have a 4-hour temperature. So here, guys, we probably should keep an eye on this area because I think that gold market will show the deep retracement by two reasons. The first reason is because this is the first reversal swing, and this is the rule of thumb for the traders. When it's a reversal swing, watch for nearest ABCD retracement. That's why retracement probably will be deep. Second, gold market by itself has the habit to show the deep retracements. That's why I think that in the beginning of the week on Monday, we should keep an eye on this possible ABCD retracement and possible agreement around 1178. If we will get retracement right here, that will be the first area where we'll be watching for possible taking the long position. This will give us also the minimal risk, so that's approximately will be the $10 per contract, with a potential upside target around 12.10, so risk-reward ratio will be acceptable. So that's the scenario that we will be watching for on the gold market. While we will dealing with this, maybe we will get some clarification on the next week from the CFTC data from the SPDR fund that will shed some light on the really institutional investor positions, how the situation will be changed, what will happen, and so on. So that's what we will be watching for in coming week. So let's see how it will be done with the market, how market will behave with this setup.